Hello, and welcome to the latest installment in our series on how fundamental analytics can be used to create individual and complex charts and graphs to help increase your margins and reduce your risk. If you're interested in taking a more in-depth look at our platform, please contact Mike Season, whose information is listed below. In order to access the Fundamental Analytics platform, you will need to go to fundamentalanalytics.com, click on New Platform Login, and insert your login information. After logging in, you get to the landing page with a choice of commodity groups. We will be choosing agriculture, and then we have various options. For example, let's choose corn. Once you get into the platform, you will have three options: prices, fundamentals, and analysis. For this example, we will select fundamentals in order to look at fundamental data. You can then see the choices for fundamentals, and in this case, we are going to look at FAS, which shows export sales data. As you can see from here, each box is a drop-down menu, and we will then choose weekly exports. This shows on a weekly basis what the exports of corn have been, since a major part of the corn commodity is to export to other countries, since the U.S. farmers depend on exports. This data has various features, including up-to-date information that you can find by sweeping over the line for 2019. By navigation, we can go to the years at the bottom of the screen in the legend and point to any year we want to see and highlight that data. The chart will automatically show you a default set of years. For example, this chart is showing back to the year 2004, but if you want to remove data, you simply need to go to the legend and left-click the year to remove it, which will automatically rescale the chart. As you can see, this is rather messy data, and Fundamental Analytics allows you to do moving average smoothing, which will allow you to see seasonality better. As you can see, when corn is harvested in spring and summer, exports dramatically increase. This is a simple switch between the two depending on what you would like to see. The data can also be viewed in spreadsheet format by clicking the Data button. You can easily go back to the year-on-year overlay chart by selecting Chart. You always have the opportunity, at any point within the platform, to easily export the data into an Excel file or into a CSV. And you can also create a hard copy of the data by printing or downloading. Another way of looking at this, because again, we have choices with all the drop-downs, is accumulative exports, which show you how the market is behaving. This shows us the exports for corn this year are running at above average. This was just a brief introduction to fundamental data, and now we are going to look at prices. We will add a tab, and the default setting is prices. Within prices, there are all sorts of choices of information relative to prices. What is very popular among trading clients is instruments and spreads. Again, we are still looking at corn, and the default is the May contract. Selecting Plot Data will plot the May 2019 contract for corn, and again, the most recent contract is 2019. Now it is very common to do what we call calendar spreads. So we will click the plus sign back at the top, and if the current contract is May and we want to compare that to December, we will change our second leg to December. In order to make a subtraction, we will change the December contract to minus in order to take the May contract minus the December contract, which we call the May-December calendar spread between those contracts, so we can see how May is trading relative to December. Once again, hit the Plot Data button, and it brings up that calendar spread. You can see that the spread is very weak compared to previous years. One other navigational feature, if you just want to start with 2019, go to 2019 in the legend, hold down the Control key, and click it once, and it brings up just the 2019 data, and then you can back into the previous years, 2018, 2017, 2016, and so on. This way, the user can easily see the most recent years, or as many as they would want by removing previous years and adjusting the scale accordingly. By doing so, you can see that back in June and July, when the tariffs were first announced, the spread kind of blew out and has been dropping since. Within instruments and spreads, you can also look at product spreads, and you can see that there are several options within ag commodity. As an example, we will look at corn versus soybeans. In this case, because soybean prices tend to be higher, we will change corn to a negative and look at the May contract for both to compare. We will again focus on the last few years, and you can see that this spread is running at very low levels because soybean prices have dropped so much that the spread has come down dramatically. As you can see, there are various options for information relative to prices. For example, we can look at the daily price table, which shows all the settles: high, low, close, and change. You can see the May at 362, July at 370, and so on. And by looking at the forward curve, you can see those prices plotted. This is typical of a commodity in which the back, or deferred months, are at higher prices because of the storage costs and interest rates. One thing we can do within the forward curve is compare it. For example, at the beginning of May, you can see how little movement, relatively speaking, there has been in prices because it has been stalled at these lower levels. You can then compare it with a year ago and see that a year ago the prices were much higher, but things have fallen off. You can also look at a simple bar chart or candlestick chart of prices by selecting High, Low, Close series. You can move in to see recent price behavior. Red bars denoting that the closing price went down relative to the open, green bars referring to days when the prices went up. Another feature in prices is the spread matrix, which is very important for the ag commodity. What this does is show all the settles as of the day before, the daily change, and then this triangular matrix of numbers are the pairwise spreads. So you're looking at the May-July spread, which was at 7 cents. This was the May-September spread, May-December, and so on. So all of these pairwise spreads show how much the different contracts are pricing compared to one another. These numbers are just basic numbers representing cents per bushel per day in storage, and the interest rate in which to store them, which we have a placeholder number of 2.5% interest. With these two numbers, we calculate the full carry, and we see that the May-July spread, full carry, is 10.97 cents to hold for the May contract, to sell to the July contract. Currently, that May-July spread was 7 cents. So the percent to full carry, as we click here, is about 71% of the way to full carry. So this distribution of this triangular matrix table shows you the various percent to full carry. When the numbers start to get close to 70 or 80%, that would signal to a trader that this would be a trade to look at, because once it gets to about 80 or 90%, it becomes a financial rather than a physical trade at the time. This was just a brief introduction to fundamental data and the various price information displays that the platform can do. If you would like more information, or if you're interested in a free trial or demonstration, please reach out to Mike Season. Also be sure to check out our website and follow us on our various social media pages, all linked below in the description box.